All right, guys. So in this video, I'm going to teach you how to combine ICT concepts with order flow, footprint charts, and how you can take basically sniper entries and increase your win rate. Now, I took this trade live with the Discord members, and I entered somewhere around here. And I'm going to go over the footprint chart and explain everything from scratch and what I looked for. So just to get started, I looked for absorption around here, and I'll get into that in a bit. But as soon as I saw the absorption of sellers, I then looked for a long and targeted this high. That happened live with the Discord members. So here's how this shit works. And might be a lengthy video, but please keep on watching till the end and you will explain each and everything on how I combine order flow footprint with ICT concepts and take high probability trades. So coming into the Friday, so this trade will happen on Monday, right? And first thing first, the platform. So this is the platform that I'm using for order flow trading, and it shows the footprint chart, it shows the order flow heat map, and all the stuff that you really need. But you only need to focus on one thing. And in the coming videos, I'm gonna teach each and everything about order flow. But essentially, this is what you need to be trading with order flow, and this is like what I used on Friday to take the trade. So keep on watching till the end. Okay, so the platform, the software name is Motive Wave. You can get it for absolutely free, and you also get a 14 days trial, and then you can get these tools, and then you can log in with your Apex accounts, or if you have a demo account, you can log in with that as well. And they basically have some brokers that provide a free rhythmic data, so there will be no delay in data like for futures, like usually. So on Friday, what I saw that we left data high. So that was the news at 8:30, right? So I pretty much marked out this and the low, but I also was looking at this liquidity pool after the market open, right? So going on to this chart over here, that's exactly when at 9:30, that's when the market opened, right? The New York session, and then we swept the low and then we pushed higher. But how did I know that price is going to push up from here? Because price could have went down towards the data low. And that's where I use this tool called absorption. And I'm going to show you each and everything on how I do it. Okay, so keep on watching. So I had this low in mind. I'm on the 1 minute time frame. Now, once you have this tool set up, right, what you want to do is go to the steady section here, and then you have to go to the volume based indicators, and then you can use the volume imprint indicator over here. Once you click on the volume imprint, you're going to see something like this. Okay, now go into the settings here and go to the column 1 and choose delta. I'm going to explain what is delta, and I'm also going to show you what is and the second column should be profile. I'm going to also explain what is profile. So let's zoom in a bit here, and let me just explain what exactly is going on here. Okay, so within this candle, you can see that you might be asking, what the hell is this, right? So within this candle, each line is a transaction within this candle. So every single transaction, right, is annotated here by these lines. Now, so let's go to, let's say this over here, right? So on the right side, we have volume. On the left side, we have delta. So what exactly does volume mean? Well, volume is the total contracts being traded at this specific transaction or price, 25445. At this price, there were 136 contracts being bought or sold. Now, the delta is the difference between the total buyers and sellers. Okay? And the bid volume are market sell orders, and the ask volume is market buy orders. So bid is basically when there are market sells, and ask is when you have market buys. So someone was buying here, right? And the total volume was like 41 contracts of buys. And then we had around 95 sellers here. Okay. So when you minus 95, sorry, so from the total volume, which is 136, right? I'm trying to explain it as easily as possible. You can see within the total amount of contracts, we have 95 sellers and 41 buyers. Now you minus 41 from 95, and you're left with negative 54. Or in other words, you would do 41 minus 95, and you'd be left with negative 54 delta. Now the delta means that there were negative like 54 more sell orders than the buy orders. Okay, so if you minus like 41 with 95, right? So if you add 95 plus 41, that is 136 contracts in total. So the difference between buyers and sellers were negative 54, which means there were 54 more sellers in this area. Okay, so I hope that is clear. So basically, bid is sell market orders and ask is market buy orders. And the difference between buyers and sellers in that specific price and transaction is called delta. So if it's in negative, that means that there were more sellers here. And if it's in positive, for example, here, which we have 22, that means that out of the 70 contracts being traded here, there were 22 more sellers, 22 more buyers than sellers. I hope that is clear. If it's not clear, rewatch the video again. Now, I look for this term called absorption, okay? And what I mean by this is that around key liquidity levels and key levels, what I'm looking for is a very specific behavior with the candles. So what I'm usually looking for is huge amount of sellers kicking in during near the sell side liquidity, right? So what does that tell me? What does that tell me is that there are a lot of sellers trying to push the price down or try to break out of this low over here, right? But if you notice very clearly here, right? We have negative 54 sellers here, price went down, but then look at this candle, okay? This specific candle, and focus on this level over here. We had negative 72 delta over here with 154 volume. Now, what is this? You can see it is highlighted with this yellow line, right? This was highlighted with this yellow line as well. Well, that means that is a point of control. Now, point of control is where the most transactions or the most volume was present. And that area is very key. Now, if you look at it here, right, in this candle, once we swept the liquidity, we had negative 72 delta, meaning that there were a lot of sellers here present around here. But the candle closed bullish. That is very surprising. I'm going to explain why that happened, okay? So there was a lot of selling pressure. A lot of sellers tried to push the price down, but we closed bullish. Well, that means there was a passive buyer. Now, what is a passive buyer? Passive buyers are buy limit orders, right? So all of these are market orders, right? Someone manually clicking the buy and sell button. But over here, someone had a very big buy limit order that absorbed all these sell orders, right? So it absorbed all these sellers. And we also closed bullish. Now that is what I call absorption, when we sweep some form of liquidity pool or we tap into a key level. And in this example, we swept this liquidity pool, right? And then we had a lot of sellers trying to push the price down, but the candle closed bullish. Okay, so that is kind of like divergence where there were a lot of sellers, but the candle closed bullish. Now that tells me there's a big player placing their buy limit orders around here. And when price reached that level, right, it pushed up. So it absorbed all these sellers. Now the sellers are out of the market in this case. And also I look for exhaustion. So the last transaction of this candle, you can see it is only -1. So there was only one contract traded around this level, which means the sellers got exhausted and they were not interested in selling the market anymore, right? But there were a lot of sellers around this area. But the candle closed bullish, right? So then I went down to the 30 seconds time frame around this area. So let me just go here. So after I saw the absorption of sellers, I basically waited for a big bullish candle or like buyers kicking in. So over here, you can see around this candle, we had 75 delta, which means that the volume here was total 101 contracts around this price, and there were 75 more buyers out of the 101, okay? So out of the 101 total orders, there were 75 buy orders. That tells me that the buyers are now in control, and I entered somewhere around here. I didn't even wait for inversion, and then I pretty much went for 1 to 1.5 risk to reward. The draw on liquidity was the data high. So basically what I'm looking for is absorption, right? And if this is one thing that I use, is I use the 3000 tick chart, and it shows even better data. So over here, you can see on the 3000 tick chart, around this candle, we had a huge absorption. And again, we had around this area, we had 149 total contracts being traded here. And out of those 149 contracts, there were 71 more sellers, 71 more sellers out of 149 total contracts, right? So if I look at the bid volume and ask volume on this, there were 110 sellers and only 39 buyers, market orders, okay? So the difference between that was negative 71. There were 71 more sellers around this area. And also the point of control, what I'm ideally looking for is the point of control to be in the wick area, okay? Not the body. So if the point of control is in the wick and we have a lot of sellers sell market orders here, which is annotated by the negative delta here, but then we also close bullish. Well, that is a absorption in my eyes. Why? Because there were a lot of sell orders here, but there was no follow through. And again, if you look at the last transaction around here, there was only one contract traded here. And after that, price pushed up, which indicates that sellers are no longer interested in selling this market, right? And then when we had absorption, so basically absorption is this, we have negative delta when we sweep the liquidity inside the wick area, not the body. Huge order, huge volume, which could also be point of control and ideally point of control. So again, point of control is where a lot of transactions happened, right? And then we have big negative delta, which means there's imbalance, okay? So there's a huge difference between buyers and sellers around this price level. Out of 149 total contracts, there were 71 more sellers present around here. But then notice we pushed down, but then we pushed back up, right up. So there was a big buy limit order resting around here that pushed the price up. All right. So now again, of course, we had a clear draw on liquidity. Then we look for a sweep of liquidity down here, right? And instead of looking for market structure shift or inversion, I entered somewhere around here. And I pretty much went for 1 to 1.5 risk reward. I could have held till here, but I was out of the market as soon as we swept, I think, this high over here. So, yeah, just wanted to make a quick video on absorption and how I combine ICT concepts. Now, this is part 1. There will be more videos coming in the future, but essentially what I'm usually looking for is when I have a clear bias, I'm looking for liquidity sweeps, and then I'm waiting for absorption. Again, I'm going to go over it one last time. So the indicator is volume imprint. I have on the column 1 delta, which is the difference between buyers and sellers. And then on the profile, I have, on the second column, I have the profile, which shows me the total contracts traded around this price level, which is this transaction over here at around 25439.25 and 25439.50. And when I see that price sweeps liquidity, there are a lot of sellers kicking in, but the candle closes bullish. Well, that means that buyers are now in control. There was a big buy limit order here that absorbed all these big sell market orders, indicating that price don't want to go lower than this. The sellers have given up, especially when you look at the exhaustion here, which the last transaction was only one contract, right? So only one contract of market sell order. That indicates that we are going to be pushing up. And as you can see, we then pushed up, and pushed up. So that is part 1. I'm going to create more videos on this very soon, but this is how I look at the market. Again, you cannot take every single absorption. You need to have a context behind the market. So we were clearly bullish, right? We had a data high formed here, data low from down there, but there was a very less chance that we might take out the data low. So all I really look for is after the market open, which is at 9:30, I look for sweep of sell side, and then I look for absorption around this area. And when I had the signs that market wants to push up, I took a long. that is going to be it for this video. I'm going to see you guys in the next part.